My friends, what is going on? It is time for the AMC Weekly Outlook video. First things first, no, I do not, if you're watching this later, go around in a flight suit. Today was my daughter's 11th birthday party, and we did a Top Gun theme. And so if you're watching this later and you're like, what is he wearing? Just so you know, that's the deal. Before we jump into the video, if you haven't done so already, please follow me on Twitter. Colin_Gladman, easiest way to keep up with everything that I'm thinking throughout the day. Also, too, if you're new to the channel, please like and subscribe to the videos, all of that good stuff. So, first thing I want to talk about is what I tweeted. Futures was basically sitting at a previous support. As you can see on Friday, came up to resistance. So I said it was going to be an interesting opening. If we look at it now, you can actually see that it gapped down. So, crypto's bleeding, typically not a good sign for the markets. Most bullish case scenario for futures, I'm going to kind of keep a watch on it, but it's going to be kind of, rounding out and starting to curl back up before market opens. So, on SPY on Friday, kind of a crazy day, pretty much bled all day, was catching the 707 fib. My team, we actually bought calls right here, right off this bounce, made a really nice return right there. But then as you can see, was kind of making a descending triangle with the 707 fib, and I kind of thought it was going to break down here, and it actually did the exact opposite. I mean, it straight up pumped all the way to the end of the day through OPEX. So, if you've watched my channel for any amount of time, I usually say, typically, however Friday ends, you're going to see that carry over into Monday. But, there's a lot of Fed meetings this week. We're going to get the interest rate hike. My personal opinion is we're probably going to see 100 basis points. I know they're expecting 75. So if we do get 100, then I think we're going to see temporarily a negative reaction. However, it does look like SPY wants to come up here. I mean, you can see in after hours, it even went right through the 0.65 fib. And like I said, this is why fibs are so important. I mean, you can see the bounce that it created on the 707 with the push up. Let's check the volume on that. So volume not super great here. Coming up here, getting kicked off of the 0.618 even in pre-market, and then curling back down. That seems pretty likely at this point in time. I would be surprised if we recovered kind of that 388, 390 area, and the interest rate hike would more than likely push us down here towards at least the double bottom on the 707, if not more, towards the 786. So, what does that mean for AMC? Well, first thing I want to talk about on AMC is going to be this trend line. I was filming some videos for my Discord the other day and was just kind of playing around with trend lines, and noticed that if you come back here from this gap down, I mean, if you start right here where AMC gap down, that would have been on March the 11th of 2020. So pretty much right when COVID started ramping up. My gym closed just a couple of days later. We closed on March the 20th. So and obviously things were getting ugly around that time. But if you go from just this first rejection point right here, you can see just from back here, and I'll zoom in even closer, how many reaction points you get. I always say, you got to use your trend lines. It's not like the line is not, a brick wall. It's not some unbreakable wall. I always say use kind of your trend lines as sort of like your supply and demand ranges. So they're going to be ranges, if you will. Just the exact same way with the fibs. I mean, I've showed you multiple times how it will quite literally hit the fib on the dot, but it should always be within that range. I mean, just go back here and look at this SPY chart. I mean, right here in this range of the 707, you definitely have perfect touches, but in that range is where it was always catching the bounces. So trend lines, in my opinion, need to be viewed very much a similar way. So, you can just see how many reaction points you're getting along this way of this red trend line. And then you had the gap down, retested that red trend line, kicked it down. Came up here, retested, pushed it right back down. And then, of course, you led, and look where it stopped. In the big squeeze in January, look where it momentarily stopped. It stopped on that red line. And then where did the buy button get caught at? Oh, it got caught on that same red trend line. And then we keep scrolling on. And then where did our low in May hit? As soon as it broke, so it did close below here, but then the very next day pushed back up. Same thing. Well, next time it closed below, very next day pushed back up. Then you had this little tweezer bottom right here. You had a nice little run. Now we came down here. What happened? We touched, came back up, and now we're pulling back down. So I am going to be watching this trend line very closely. Now, one thing that I have seen a few times is, let me put it like this. So I've said this many times before. Anytime the chart gives you new information, you should be willing to adjust your trends, adjust your fibs, adjust your supply and demand regions. Every second the market is open, you're constantly getting new information, and you should always use that new information to help adapt your trading strategy. One thing that is unwise, in my opinion, is moving a line for the sake of moving a line to lead towards your bias. The worst thing that you can do when it comes to charting, technical analysis, so whether you're new to technical analysis or whether you're an old dog, I don't care. In my opinion, probably the worst thing that you can do is always chart towards what your bias might be, because that's not how the stock market works. That's not how you can make money. You can make money by setting up the proper play and playing the proper direction of the stock, regardless of what that is. Now, of course, I'm in the same boat as majority of you. I want to see AMC stock go up, but I'm not going to manipulate my chart just to give myself or you guys or anybody else out there a bias of just saying, oh, no, you know what? I actually moved this line a little bit, and I actually think we're still good. So let me just explain how I drew my line. So I started right here from the low on May 11th, and you can clearly see that if you use these touch points right in here, probably shouldn't have gotten rid of it. So let me change colors here so this is easier to see as well. We'll go green. Let me just hide this one. Let me lock it, hide it. There we go. So the couple things that I really like about trends is I like for them to act as support and resistance, not just one direction. The more you see both sides of the coin of what that line is going to do, in my opinion, the more solid it's going to become. Also, too, you don't have to just like hit every little tick right on the dot. Now, yes, I do agree that that is better. However, the more touch points and the better the reactions that you get, in my opinion, is the best way to do it. So let's travel this line the way I drew it. So we've got our support right here. So the first tick. Then the very next day we dipped below, but we closed above. Then the next 2 days we had same thing. We had two little ticks below, but overall we closed above. Then we actually touched it with the ticks here. Same thing. Touched the tick here. Same thing. Touched the tick here. Closed above it here. Now, very next day acted as resistance. Very next day, trend line acted as resistance. Came down, broke through, came back down, acted as support. Now we have broken through. So in my opinion, this is how you need to view this trend line. Not going, oh, okay, I don't like that, so I'm just going to ignore all these other touch points I got, and I'm just going to go like this. That is not how technical analysis should work, in my opinion, and go, oh, no, see, actually we're clearly above support, or even something like this, and now you're just, moving it away. So in my opinion, we are below support. Doesn't make it right. It just means my opinion, and if you're watching my channel, that's what you're here for. So sorry if you don't like it. But from here, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 different reaction points on this trend line. So as far as I'm concerned, we are below. Now, what does that mean as far as downside is concerned. Well, I said once we gap down right here, I said, and let me take that off for just a second so you guys can see. I tweeted this out, but I basically said that we had a gap down that occurred. Let me go ahead and get rid of this line. Yeah, so when this gap down happened right here. So I said we had a gap down that occurred. So what you want to be careful of is, do we push back up above this gap? Do we feel this gap on top before we then get pushed back down to the downside to fill this gap? So on our most recent move up, there was 2 gaps to the upside, and then 1 gap to the downside. Well, we've already filled this one, so I'm going to remove that one. However, we still have this gap down here that's going to be down to about like 860, I believe. Yeah, we'll just call it 860. So once we lost our low right here on Friday, if we could have double bottomed right here, or if we could have, as we came back down, if we could have made a higher low and started curling back up, then we could have remained bullish. Once we lost this low right here, now my bias is definitely that we're going to come down here. We're going to fill this gap, probably dip below it a little bit. Like I said, I think we're going to come down to around 850, and then we can start curling back up at that point in time. Now, just like on this gap fill, if the price action doesn't look good, then we're going to roll over and we're going to come back down even further and might have to catch a double bottom around that $7.90. So that's really what we want to watch for at this point in time. And if I turn the after hours back on, I mean, you can see from a gap fill to gap fill standpoint, I mean, it quite literally came up, filled that gap, double topped. Oops. So it came up, it filled the gap, it double topped, and then as soon as it filled that gap, look how the price action changed. All of a sudden, big bearish candles pushing you to the downside. Okay? And then once you double top and then you broke the neckline, like I said, now my bias is definitely to the downside. Now, overall, I think the bullish trend is still intact. And if we go back here and look at the line that I just had, I think this is it. We'll see. Oh, look at that little scribble. Coincidence. But I think there's a good chance that we can maybe even come down here, touch this trend line. Might take a day or two, so $8 or so. My bias is somewhere around that 8 to 850 is where we're going to see our next bounce and start to curl up. And a big reason for that is this kind of stuff bugs me. I just got to delete it. So if we do see that, I think we're going to see that if the market is kind of ugly. No, that's one thing I hadn't seen. So we are at the stopped right at the 0.618. So it is possible to get a reversal here. But like I said, I think coming down here, hitting that 786. I said, let's see here. It would have been a few videos ago. Anyway, I said that everybody was going to be going at Choda, and I said we would probably come down here and then curl back up. We might not even come that low, but you definitely want to see. And I'm just kind of analyzing the chart here with you guys, so I apologize if it seems a little all over the place. I don't ever plan out these videos. But if, I mean, this, what is that, 862? Yeah, so like I said, I really think that somewhere in this ballpark, so let's just say from this region right in here coming down in here is where I think you'll come down and start rounding out. Now, what we don't want to see is we don't want to see more of this. We don't want to see red days and the volume continue to ramp up. All right, so if we start coming down here and the ugly price action, so if we start getting, big fat, we'll make this ugly, right? Gotta be red. So if we start getting big fat ugly candles looking something like this, and we break through this macro trend here, and the volume is picking up, then it's hold on to your butts. It's brace yourselves at that point in time. We'd definitely be coming down here to probably 6. Yeah, probably somewhere in that 6 ballpark. And so we would need to hope for that type of bounce. At the end of the day, I do think that AMC is going to need the overall market to recover. We have had moments of divergence, but at the end of the day, I think AMC is going to need an overall bull market to return. If we look at it compared to, well, I'll just pull it up and then we'll call it a day. It's on the 15-minute. So let's just kind of pull these bad boys up. Kind of line them up here just a little bit. So where's August? So right here from the low in June, when the overall market recovered, you saw AMC recover. Okay? When the overall market did this, you saw AMC do this. Okay? Back here in March, when the overall market was doing this, you saw AMC doing this. Okay? So, I do believe personally that we're going to need, not sure what that fib is, but I do believe we need to see the overall market improve. Okay? Yes, like I said, there's going to be moments where they don't track, but as soon as SPY has hit its peak and it start bleeding off, AMC has done the exact same thing. And then when you had this brief little SPY relief rally, you saw an AMC. So I need my negative beta or anything like that. What you need is the overall global market. Look how identical these moves are, guys. Okay? Now, I will say this. The one difference would be is if some type of major catalyst happened, with AMC itself. Whether, Adam Aaron diluted ape and AMC was able to pay off, debt, that could be a difference. But without a major catalyst, let me say that again, without a major catalyst, if the overall market is going to dump, you're going to see AMC dump right along with it. Okay? That is my personal opinion. Don't be mad or shoot the messenger or anything like that. Okay? Please don't. Now, overall macro-wise, like I said, we are still above support. You can look at these touch points up here, plus the macro uptrend. So I do think there's a lot of support underneath us, but we really need to see SPY recover here. Okay? That is just my personal opinion. You want AMC to look good, you need the overall market to look good. If the overall market is going to dump, you are going to see AMC continue to dump. We will be looking at lower lows. And that's unfortunate, but I also think it is what it is. Now, so long as the overall market, so long as you believe the overall market is eventually going to return, So if you believe, and unless you are buying into the, nope, it's worse than '08, and we're going to do this, and we're going to test, the COVID lows or anything like that. If we start testing, COVID lows, AMC, hopefully, it's more than likely going to come down. I would love to be wrong on that, but it's just not. Like if you look at what AMC does versus what the market does. Okay? So that's just kind of my personal opinion. I'd like to see the overall market do better, for AMC to have a real opportunity to do better. When did that start? January? So yeah, so I mean AMC, like I said, the levels are going to be the same. And I mean AMC is, apples to apples, you start from this dump right here to where it is now. It's 20% decline. So, yeah, that is a 35% decline. But, once again, this is a single stock compared to the SPY. So, like I said, it's just, if we want to see AMC recover, we need the global market to recover. And it does not look good right now. Okay? We lost, this great trend line right here that everybody was talking about, and not only did we lose it, you had the break. So you had your break and you had your retest, and then push down. So I'm hoping the best case for AMC is going to be that they come out, they decide inflation is still under control, they're doing a great job, and they're going to stick with the 75-point hike. But I don't think that's going to be the case. Like I said, my bias is towards the 100. All right. GME actually does look better overall than AMC right now. Now, if you've watched my stuff, you know that multiple times. But you can kind of see from a similar macro trend, GME is up inside its pennant, and from the new one that I'm really tracking on AMC, it is inside of its macro trend as well. Okay, so we want to stay on the north side of it. As you can see on the north side of it, we get positive bounces. We do not want to break below that. So, Gavin on Twitter and YouTube, highly recommend go watch his most recent Elliott Wave Theory video on GME. He is still of the opinion that GME might come up to about the 32 range, and then we need to see what it's going to look like, because it still might come back down to 22. So if GME pushes up a little bit higher and then really has a hard pullback all the way back down to 22, let's see here. Where was AMC's price when GME was in that range? So that would have been September 7th. Yeah, so like I said, it makes sense to come down and do the gap fill. If GME pulls back to 22, I think AMC is definitely going to come back to at least that $7.90 range for that gap fill. All right, that's enough rambling. Thank you if you stayed this entire time. I appreciate your time. I hope you're learning something. If you have any questions, please comment, like, subscribe, follow me on Twitter. Have a good week, my friends. Like I said, my bias is downside this week. So that's going to be the targets that I'm looking for, is somewhere between that $8 to $8.50 range is going to be where I'm looking for a bounce. Now, if we do catch upside here, if the market just kind of fakes everybody out, if you will, and we do see some upside, let's look at what potentially could be the upside target. Say I'm like Dave, I'm like, okay, we're done, and then keep talking for another 20 minutes. So if we use a fib extension, Then the 382 to the 0.5 would be our area where we've already seen some resistance. The 0.618 would be right at that $10. I mean, I really think that maybe like best case scenario, $10 to $10.50 would probably be the upside for this week. But as always, I'm happy to be wrong, right? We'll know more as the week progresses here. See, look at that. Look at futures. Already recovering a little bit. So we'll keep an eye on it. One day, one second at a time. Like I said, the information is always going to be changing as the market is open. That's just how it works. Okay, so you can't take what anybody said and then a drastic difference happens and you go, well, you said it was going to do that. And it's like, well, yeah, at that point in time, that was my bias. But then when new information came out, guess what I did? I changed my opinion as I got more information. That's what wise people do. Like, holy cow. As you get more information, it's okay to change your opinion on how things are going to go. But, in the world of Twitter, once you say something, man, that's the only way it's got to happen. It's just stupid, all right? Don't be like that. Allow people to have different opinions. Allow people to change their mind as new information comes out. Much love, my friends. Thank you for everything, and I'll see you in the next video. No plans on any other videos as of right now other than the weekly outlooks, but if I think I see something important that we need to make a video and talk about, we will do so. Have a good one, my friends.